Good evening, traders. This is the DAX video for Wednesday, November the 14th. In front of us is the updated chart with zones that I have posted before the open. I said in my prep that this zone that used to be bull-bear zone yesterday, because the price was going up and down through it, is now its reference zone to gauge market strength or weakness. And basically that important zones are in the November 12 after our low, that is around 300, and high, November 12 high. Also yesterday high is here with the confluence of cash close. Now let's get to the charts and see what was the opportunities for us day traders for today. In my prep that I have posted on Twitter, I said that this is a possible bear flag, and that the break of this bear flag could lead to gap fills, and also that we must watch for the early signs of weakness on DAX. So what was the situation on the open? This line here represents the beginning of the session, and this here was the pre-market. And as you can see, pre-market, let's go to 5-minute charts to observe this better. In pre-market, DAX continued to trade in this small range, continued this range from the yesterday evening, and was in this bear flag. Basically, this channel acts as a bear flag. The first trade, the first opportunity is something that really doesn't have anything to do with the zones. It has to do with the context, and the context was in the prep described that US markets yesterday finished at the lows, and Asian markets was mostly down. So sentiment was really in favor of this move to the downside. So you could enter short right here at the open with your stop above this small range, and it was one of the trades that I personally had and tweeted about that trade and another trade on Twitter. So this first move and the opportunity was to short this small range, exiting here at the first zone. It was a trade for like 30 or 40 points, and then market retested this trading range and this bear flag, and that was second trading opportunity to enter around 390, let's say, short, and to exit at the gap fill or at the zone. So this would be an exit here, and this trade could provide you like 50 or 60 points or even a bit more. And then observe what happened here. If you are trading something like that, this is a bear flag, so you had this picture before it has broken, and if this is going to be a bear flag, that the breaking of that bear flag could lead to gap fill and could lead to a movement to the flag lows, or even to make a lower low. But why I'm saying this? Because of the expectation. What could you expect when you see a bear flag breaking down? If it is going to be a decent bear flag, then at least it will go to retest the lows, and maybe if there is sufficient strength and momentum, if the market is weak enough, it will make a lower low. That didn't really happen today, but market did retest November 12 after our lows. This is Monday after our lows. This is important zone, and this was your entry exit of this trade at the gap. I did my trade exiting 2 points above the gap, and this here, it was a perfect opportunity for you to go long with your stop below the zone, behind the zone. As always, when you are fading the zones, stop must be behind the zone. So invalidation point for the zones is behind the zone. And then also note that this area here, which was tested at 10 a.m. So by the 10 o'clock in first hour of trading, we already had two short opportunities and then a long opportunity at 10 a.m. Also, S&P was on the support. I shown this chart before in one of my videos about the correlation between E-mini futures and DAX futures. And now we are in this period where they are correlating. So it is not a bad idea, you know, to look occasionally to the S&P chart, because DAX is a follower. DAX is a follower of the S&P, and in rare occasions it doesn't correlate like this from May to October. It really didn't correlate, but a majority of time it will correlate quite good with the S&P. So it is not a bad idea, you know, to look at the S&P chart. You don't need to have you know, precise zones to the tick or whatever. You just need to stay aware of the, you know, support and resistance zones in general. So let's observe the S&P. S&P was here right at 10 a.m. and this is the you know, support zone for it. Yeah, look at this. This is a support zone, and it was here on 10 a.m. It was also, and we will get to that, correlating, and in the exact same time DAX and S&P hit resistance. Let's go back to the DAX chart, to the zones, and observe what other opportunities we had. So this was the opportunity number 3, and now we really don't know that the move is going to be 250 points to the upside without any pullback. So if you have missed this long and the price is already like here, it's very hard, you know, to jump in to this long, not knowing where it will end. So if you are missed this, then your only chance to, you know, make some money out of this move is to fade it, but to fade it when it is exhausted, you know, when it is exhausted. So first opportunity could be around here. I personally did that, shorted here, but it was a loss, so I lost here about almost 30 points here, and then short again here, and that was the best, one of the best short opportunities of the day, because we had confluence of 3 things. First thing, we had a minor zone here. It had a false break of this minor zone, also a touch of this trend line of this channel, and also at the same time, you look what this is, 15:30, so it's 3:30 p.m. New York Stock Exchange open, and S&P was at the exact same time on his own resistance. So this was a major resistance for the S&P. S&P made enormous move for this instrument in the European session, which is you know, overnight for them. And it was you know, logical to see at least a reaction here, but as you can see, it was, you know, a complete reversal. And this, when you see this complete reversal of you know, overnight price action in US market, that is certainly not a bullish sign, because this mean that they can, you know, they hardly wait for the open just to, you know, press the pedal for sell, and they were just selling, sell all the way to here. So this short here of DAX was our fourth day trading opportunity, and exit was really for day traders could be here at the zone of yesterday high, which was broken and now act as support, and the cash close is also here, and you could draw fib retracement for, you know, to see where could you exit this. And also 38.2 fib retracement is close to the cash close, making this zone a confluence, you know, for you to close. But as you can see, that the market provided a more and basically just stalled around 61.8 fib retracement, and now who knows where the price will end at 10 p.m. when the futures market is closed. But for now, RTH session is over, and as you can see here, American markets are deep in the red. So we shall see about what will happen on the next days. This move today, this up move today, really I didn't expect that. I already put some markers here for me that this was look above and failed, that it was an upthrust, but I will delete that now. And on the daily chart, really nothing has changed. Sequence of the lower highs dating from the all-time high, lower high, lower high, lower high, and so on, isn't changed. In order for this to be changed and for us to expect some higher, movements, first the price should make a higher high, and then maybe this or where the 300 level is could be a higher low regarding of this low here, if the price could break above 670, above this level, and above 700, above this, above all of this. That could be a sign of the strength in the market. So far market is like bearish or neutral bearish. So far no signs of bullish activity are in this market on bigger time frames. So that is all for me for today. It was a good day for good opportunities for us day traders. This two here was more contextually based. This first one, if you think that the price is going to break this bear flag, and you had this range from before and weakness on the other markets, then break and retest of the bear flag, then along on the basically main support zone for today, and then short on the exhaustion move here. Along the way, I said I was shorting here, also I lost it, that one trade was a loser. But when you have this kind of movement to the upside or to the downside so hard without any pullbacks, you can attempt to fade that only when the price is already gone some distance, like 150, 200 points, when you expect exhaustion. And if it is not exhausted here, then you will try here. If it is not exhausted here and you're not in the long move, then you will try here. Because it can't move like this forever. We have ranges, and we have average true range, and it is what we are using it for, to gauge what and when the market could be exhausted. And now we have exhaustion into the zone, into the trend line, and also US market was at this as its own resistance. So that was the confluence of the reasons why to short this zone at this time. And that is all for me for this DAX video. I wish you good trading and good night.